Welcome everyone once again. This is all things crypto, and our voice of reason for today's program is George Michalopoulos. He is head portfolio manager at Typhon Capital Management, located here in beautiful Miami Beach. If you haven't been able to make it down, you should. Is about all I can really say. It's a wonderful place to be. Today, George will cover a wide variety of topics, some that revolve around Typhon's cryptocurrency fund, and then some other that are of a general nature with cryptocurrency, that space, and then some DeFi, decentralized finance. So, George, it is on you.
Excellent. Well, thanks, Boo. Appreciate it. This is an exciting time for crypto. I don't know how closely everybody's following, but we're in a crossroads where Bitcoin is starting, I think, to figure out, contrary to recent price movement, that it's not necessarily destined to be the top dog forever, and
Sorry, George, you're muted. Can you unmute?
have I been muted this whole time?
No, just for a second.
Okay.
Continue.
Got it. So there's sort of two conflicting major currents in the cryptocurrency market right now. The first is around a narrative of inflation, where the digital gold value proposition of Bitcoin sort of reigns supreme and is the logical choice to this day, in my opinion, on the quote unquote sound money frontier. It has the most established network effects, the limited scarcity, the history insofar as cryptocurrencies go, at least to have the faith when it comes to that aspect of cryptocurrencies. Ethereum being on the other end, with the 800-pound gorilla in the smart contracting space, certainly with competitors looking to replace it, but still indisputably number one, certainly by the metrics that I care about, not just market cap, but, and these are of course related, but the network effects of the developers involved, of the community, and the speed with which things are evolving in the Ethereum ecosphere. And that's really where I'm excited right now. And I think what the market is struggling to digest is how do we value all these possibilities through programmable blockchain tech, represented primarily through Ethereum and other suitors that want to take its throne, and Bitcoin being the established 800-pound gorilla and king of the space, 1.1 trillion market cap, and also the winner of the inflation wars, I would think, in an era where inflation is a very scary thing for a lot of market participants on a macro level, not just in the crypto world. So I think if we don't have hyperinflation, Bitcoin is going to struggle to keep up with the amount of excitement and evolution that's happening in the sort of Ethereum and smart contracting space. And I'm going to go a little bit into why that is. One is just simply behavioral reasons. It's a new and sexier narrative about what you can do, what you can talk about doing, and that's always attractive to both professional investors and casual investors. People like to hear a story, but above and beyond that, there's a massive economic incentive through very creative yield generating mechanisms. Now, it's debatable how sustainable those yield generating mechanisms are, but some of them are very interesting and go beyond just being a marketing gimmick. Some are a marketing gimmick. Others, on the other hand, are actually dividing real economic value from groups that we call decentralized autonomous organizations. You may have heard that term DAO. And they are using governance tools to organize themselves to make more and more money using increased functionality in groups on largely L2, meaning layer 2 Ethereum ecosystems, to a lesser extent in other ecosystems as well, but most of the innovation is happening on the Ethereum side. So to sort of simplify that a little bit, what it means is you have these sort of decentralized companies that are starting to act almost like pseudo sovereigns in some ways because of the governance layer, acting to make real money and add real utility using these smart contracting tools, and then redistributing that through the token holders and the community at large to get some completely blowing the TradFi, traditional finance world out of the water type of figures. So it's exciting. Again, the story's there, but the economic incentive is there, the network effects, the development speed, all of these things are lining up to make Ethereum and its sort of layer 2 DeFi 2 ecosystem very exciting. And actually, that's another thing that I should rewind a little bit. Part of what's going to make this possible at scale is just starting to come online too. And you may have heard of Ethereum 2.0, but you're probably less likely to have heard of layer 2 scaling solutions like ZK rollups. Without going too deep into the technicals, which I myself do not claim expertise in, but would also be somewhat unnecessary for the purposes of this call, what that means is that Ethereum very soon, or the Ethereum ecosystem, when you include these layer 2 solutions, is going to be able to give you much higher throughput at much lower cost. So we're talking about computational and data availability, which is very important for a world computer, as it were, with way lower transaction costs that will enable much higher frequency type of activity, which should enable more accessibility, which should grow the community, and which should make all of these incentives all the more amplified. And these things are happening at breakneck speed. In particular, projects like ZK Sync, Starknet, both Ethereum 2 solutions, and they're not just theoretical, by the way. These have been, some are in production. We're talking about testnet stuff that you can get your hands dirty with today. And the experience for the limited things that you can do on these layer 2 applications for now is superior to anything else out there. And it has yet all the advantages, inherits all the security advantages and the network advantages that Ethereum already has. So we're getting to a very magical point in terms of what's going to be possible in the Ethereum ecosystem, and obviously more broadly in cryptocurrencies, at the same time that we're seeing innovation in parallel in governance and in tokenomics, which are going to create emergent complexity and solutions that we can't even really imagine right now. So to give you an example of a very impressive decentralized organization that I'm following closely, it's called Olympus. The token is OWN. And the concept that they're striving for is basically a all digital reserve currency that's backed by other assets, managed by a decentralized government via the community. So they are looking to not only capture fees and other real economics as a part of their project, but then steering, using that governance, those treasuries for even more money and even more utility. So that's very exciting. Now, let's talk a little bit about what else is happening in the space in terms of other chains. I'm sure many have heard of things like Solana and Avalanche and Cardano, and all very interesting and projects worth following and potentially investing in their own right for different reasons. But what I think is maybe misunderstood by the market that we should be paying attention to is, regardless of your poison of choice, they all are going to struggle with this tug of war between what will go on layer 1 and what will go on layer 2. None of them can be a purely layer 1 solution. None of them, including Solana and the very high throughput stuff. They will need to have that balance. And the only people that have it, or are imminently going to have it, it seems, in the next few months, is the Ethereum community through E 2.0 and through ZK rollups in particular. So that is my rant for now. If you take one thing away from this, well, two minor things. One, that we're on the cusp of a breakthrough in crypto tech. And two, we are on the cusp of a breakthrough in terms of what communities can do for themselves on these platforms that will add a whole new frontier of possibility that will filter through into incentives, which should filter through into more and more capital coming into the space and meaning a lot of money to be made. Now, you'll notice that this excitement and the implicit upside that I'm noting is much less about the big dogs and Bitcoin, even Ethereum itself, and more about these other newer, smaller, higher upside tokens and layer 2 solutions and DAOs. And that is my current opinion, is that the asymmetry, the next 100x, is not in the names most heard of as household names in the space, but in these new smaller solutions that are going to enable all sorts of things we haven't even imagined yet. And that's why picking and being very in tune with these things is going to be all the more important. On our end, we are exploring and going as quickly as we can towards incorporating DeFi into our own trading strategies in a way that's responsible and in compliance from a regulatory perspective. And some new possibilities have opened up recently that make us think that we can do that imminently. I won't promise a time because these things go slower than you'd expect, but that is the future for our fund, and our money will be where our mouth is as soon as we can be. Now, if there's anything else, for me, that kind of summarizes the real themes that I'm paying attention to, that I think you should be paying attention to. But it's kind of complicated, and I'm sure people have questions. I'd love to kind of punt it over to you guys if you have anything I can help answer.
So let's go through this. David, do you have a handle on handling Q&A, or should I do it?
So what we can do right now is, if you are using the web app of Microsoft Teams, if you'd like to raise your hand to ask a question to George, you can hit Control-Shift-K on your keyboard. If you are on your phone using the Teams app, there should be on the bottom a 3-dot button that, if you click, pulls up a menu where there is a raise hand function in the top right of the menu. So just if we raise our hands that way, George can call on somebody and we can begin the Q&A session.
By the way, I should probably admit at this point, I don't know how to identify who has their hands raised. David, can you educate?
So right now, can you see David Klusendorf with his hand up?
Yes, I do, but he's on video for me, and many others are not. But I do see blue. I see your raised hand. Might mean that nobody has their hands raised, which is absolutely fine, of course. But it might be that I'm missing it. So if you guys see it and call them out, please call people out for me, because I cannot see from here.
So I'll start the ball rolling then, George. When you look at this from a very broad perspective, the things that get the most press really are on the regulatory side. How is a government going to fall on this? And not just the United States, but other entities, the EU, the APAC countries. How do you begin to judge the impact on trying to navigate what's going to survive?
That's a really interesting question, especially when it comes to DeFi. So there's a couple layers here, and certainly a lot of unknowns that remain. But on the one hand, what you've seen is an increased number using these decentralized autonomous organization structures have anonymous teams that are distributed around the world. So unlike a centralized company based in Delaware or Minnesota or wherever, it's not easy or clear how you shut them down. So you can make them more difficult to access institutionally via banks or other fiat on-ramps like Coinbase, for example, that they can do. They can make it illegal as a citizen, although I don't know if they'd take such a heavy hand to participate in those things. But that would simply further accelerate the trend of distributed and anonymous teams. So there's very little mechanically that can be done in that type of structure. And the speed with which the innovations to further protect and insulate from such measures is happening, I think, outweighs the ability of the SEC and other regulatory bodies to act quickly enough. Now, that's not to say that they can't limit or slow or that they're ineffective. That's not my point, but I don't see a way to put this back. There's no genie back in the bottle scenario here, as far as I can tell. And really, I'm not sure that they want to themselves. I think they want to protect consumers in an intelligent way, which I would fully endorse. There are still lots of cons and scams, but the legitimate projects, the interesting innovations, the human capital attached to those projects, you don't want those people not wanting to be in the US. They add a ton of value on several different levels as citizens, from taxes to the network effects in various cities like Silicon Valley that they bring to the table. You don't want them going abroad as much as possible. So I don't think they completely want to kill the golden goose, to mix all my analogies here. So we'll see is the answer, but ultimately there's only so much they can do. And I think the appetite on top of that is to be measured and to be protective, not to be draconian for the sake of being draconian. That said, with government, you never know. So that's a risk that certainly weighs on the industry as a whole, and that we're just going to have to stay tuned to truly see what happens.
If anybody else has any questions and we're not, the hand function isn't working, feel free to unmute and hopefully we can, parse through if there's multiple people to get some more questions going.
Rick here.
Hey, Rick.
Hi, everybody. Thanks again, George. And just thinking out loud for investors, is there any benefit of participating now, or is it better to do it now than after the first year, or does it make a difference?
It's always hard to time these things perfectly. Selfishly, of course, sooner is better from my perspective, right? We'd love to grow the team out and bring you in, and it feels very much from a timing perspective that the timing is now. But it's also such a frontier investment class that it's not something to feel pressured to accelerate into until the ducks are in a row and everybody's comfortable with exactly what they're getting into. And that, given the complexity of the space, the high risk nature of the space, I would say better bias yourself in terms of your comfort level and your preparedness than necessarily on being here tomorrow. But whether it's today, tomorrow, next week, next month, the coming quarter or two, I think is a very exciting period that personally, and my money is obviously in this fund as well, and I will continue to keep it that way, I'm excited to be participating in. And it's the most exciting investment class, bar none, for me right now.
So an investor would be coming in to act with you, same fund.
Yes, and again, we're not quite ready for DeFi the way that I've excited you on yet because of custodial reasons. but we're hoping sooner rather than later. And if nothing else, it's something to be watching from now, even if we're not talking about necessarily investing. Keep your eye out on DeFi 2.0. I don't know if people follow Google search trends or if you're on any of the Block. Block is an example of a fairly sophisticated blog around cryptocurrencies. It's not free, it is paywalled, but you can follow some of their editors on Twitter just to start becoming more and more familiar with the language, because it's very much a language like it is anything else. I think that would be great preparatory work. And as soon as we can hit the ground running on our end, we will be. But there's implications for example, Ethereum being the layer one solution for Ethereum in the kind of narrative and future that I spelled out for you, which makes me very optimistic, even without us being directly in DeFi. Especially after a little nice shakeout that we're going to get here. I think we'll probably go down to 4,000 in Ethereum, find a footing, and start to realize this reality going into the holiday season. We might find, and this is a bit of a reach, but we might find with capital being as available as it is right now and retail spending being as high as it is, but with limited supply, digital goods could benefit in that type of physical scarcity scenario. And what better gift than a gift that many believe can 10x, So it wouldn't surprise me if we see some holiday boost in demand for that reason alone. So there's some contemporaneous sort of tailwinds in addition to a good technical entry and the implications for layer one stuff, even if it's not quite as sexy as the layer two stuff, that make me believe now is the time.
Thank you.
Hi, George. This is Shresh here. Thank you so much for the overview. Really super helpful. Forgive my ignorance here, but as it relates to DeFi, you mentioned that there were certain limitations right now from a custody standpoint. Coupled with that, what are some other barriers to entry, so to speak, that you're seeing in terms of inhibiting you towards entering into the DeFi space, acknowledging that it's a young space and it hasn't evolved? And sort of part two to that question is, I would imagine that something like a Coinbase would be a little bit too regulated as it relates to accessing these DAOs. So do you go on exchanges like Uniswap, or what's your point of entry?
Yeah, great question. So the main concern is still custodial, but this space is fraught with risk at deeply technical levels as well. So because they're, the mechanism by which they're decentralized is essentially smart contracts. And the issue with smart contracts, as I'm sure you've all read, is that they can have weaknesses in the code. They can have bugs. They can be hacked. And often, even if none of those things is true, they can be rugged by administrators who keep, for supposedly basically practical reasons early in a project's life cycle, control in a centralized manner over key functions of a given project that can be used towards nefarious ends to basically make the project collapse to zero overnight. So these sort of binary Armageddon-like scenarios for an investment that are deeply technical beyond my expertise as well require mitigation. And there are some solutions. For example, there are some insurance products, there are auditing tools, there are things to mitigate them. But at some level, people interested in partaking in this need to use the most crude risk management tool of all, and we will do similarly when the time comes, which is allocating an amount you assume can go to zero and not have an outcome that is catastrophic for investors. And that means proper risk sizing, basically, which is something that we need to think about a lot in every market. And the difference being that most markets can't go to zero overnight, whereas here they can. So our main risks in summary are one, custodial, and two, technical around the weaknesses and security around smart contracts. Those are the main risks. Now, in terms of your second question, how are they accessible? To some extent, they're still, I believe, accessible with a Coinbase wallet. But yes, decentralized exchanges, tools like MetaMask, hooking into whether it's 1inch, which is an aggregator of DEXs, or Uniswap or SushiSwap, Uniswap being the biggest of the decentralized exchanges, and being able to swap from base currencies like Ethereum or stable coins like USDC into the various ERC20 tokens in question. The example I gave, but then there's another layer, which is the app, which is where you actually participate with and engage with these smart contracts in a yield generating fashion so that you can participate in the economics. But that's going down a rabbit hole I don't think is important for this call. But that's sort of the way, and one possibility we're exploring, for example, is the institutional option that MetaMask has brought to the table to do exactly that.
Awesome. Thanks so much for that. Just one additional question, if you don't mind. When it comes to sort of the way you access them and once you invest in them, from a tax component, what does it look like, given that you mentioned that these are sort of autonomous participants spread across the globe? From a regulatory, less so regulation, more so from a tax point of view, as an investor, are you sort of taxed when you convert it into a stable coin and sort of withdraw your position from the exchange? Or what does it look like? Again, sorry for the ignorance. I just
no, and in fairness, full disclaimer here, I'm not a tax attorney, and I certainly I wouldn't want to advise anybody on this topic. So if it's a question that anybody listening is going to take to heart for their own actions, please consult your tax attorney. My understanding, though, since we're talking about this stuff, is that essentially at any time, whether you're swapping or not swapping, you're creating a tax event. So going from Ethereum to USDC or to Bitcoin, from Ethereum to an ERC20 token, I believe is viewed as a taxable event if it's, of course, profitable, but nonetheless, it's an event that needs to be tracked as a trade like any other trade of a security would be. I think a lot of this is still wild, wild west and hasn't been fully tested, even by the IRS or clarified. That's my tourist's understanding of the tax code right now.
Yeah. Thanks, George.
Anybody else?
All right.
Well, thank you everybody for taking the time to listen to me ramble and rant as usual. I think, we'll do one of these again soon because of how quickly the space is evolving, hopefully next month. And if something pertinent comes up before that, if we have your emails, we'll be sending it out to the email list. If not, you can sign up at typhoncap.com and just indicate your interest for crypto, and we'll get you those notes on a regular basis, which we do also monthly, and can do on demand as needed. So thanks for taking the time, everybody. Don't hesitate to reach out. My email is george@typhoncap.com. Otherwise, we'll see you sometime next month on a meeting like this, or you'll hear from us via email if you sign up.